Hello again and welcome back to the RegalX Training Academy video courses. My name is Daniel Garcia and I'm your instructor on this video course series. Today in video number 5 of the intermediate video series, we will talk about how to think strategically. How can we combine what we've learned over the course of the series in order to apply it in a strategic way? Then I will also talk about a few main different trading styles, and it would be helpful for you to have an idea what they are and why you would want to know that. It's not really a trading, it's about innovating. It's not about following so much, and it is ample really that you identify your own trading style. You can develop a combination of main styles. You can come up with ideas. You know, there's a number of things to look at the market. And the great thing about the market is it has many niches. You can focus on a very specific things in a market that others don't necessarily trade or even look at. And this is how you apply your own trading style. So let's just dive into this and see how we can apply that for a moment. So for example, let's just make it show filters, and we go start day at the last week. We include the last week, all right, and whatever. That's not so important. More important is that we have the last week inside here. So, for example, on Wednesday, that's Thursday already. On Wednesday, we had the FOMC, the U.S., the Federal Reserve Board, the U.S. Central Bank, and they raised interest rates one more time. But what happened here is when you look at the euro dollar, for example, and let's go back to that date. So last Wednesday again, right? So Wednesday the 13th, and when we go back to Wednesday we're in May already. Why are we in May? 1 second, this is June. Okay, with 30 minutes. So here we are. So you can see that the FOMC, it did really nothing. Nothing. It didn't move the market so much. But then later on, when the ECB came, then big things happened. So what you want to know is that, okay, you look at the euro dollar here before that decline. And when you look at it, you try to figure out, like, how can we... wait 1 second. Let me just make it a little bit better here so that we can figure out how we put it into perspective. What's going on here? And for example, as you can see, the euro massively lost over the course of the last few months here, and it found support now back at this level. So that's the same level that was very different for the market, where it was not able to break out as much. So for this to level break again, it would, and this is why we combine technicals and fundamentals. So technically, this is a very important price level for this price level to break. There needs to be a reason, not always. There is a reason, but usually at a very weak levels. There must be something fundamentally changed or something fundamentally caused this. And in this case, if you look at it, yes, the euro was sold off, although a lot of people had speculated that the ECB will announce something very hawkish, which is the end of the asset purchase program, which is dead. So it's reducing the liquidity in the market, which is usually if you reduce the supply of something, it becomes more expensive. So it should have pushed the euro higher. However, the ECB said that they will keep interest rates as low as they are, at least throughout the summer of 2019. So they basically backdoored their hawkish statement of the ending the asset purchase program with a statement that they're not going to raise interest rates. And the market really took more on this message and sold off. But it sold off and didn't break any significant levels. All right, so let's recap. The economy in the Eurozone has been doing better and better. We see, yes, there's a political jitters here and there's Brexit, there's Italy, there's Greece, but at the end of the day, so far, things are doing better. And the ECB is reducing the liquidity in the market. And so that's why there's a fairly high chance that the euro right now could see further upside, especially over the course of the next 6, 8, 12 months. If that changes, because the ECB also said they're ending the asset purchase program and they are reducing it by September already, and they're ending it by December or by the end of December. They said they might bring it back as a tool if needed. And also, so they're always trying to backtrack their rather hawkish statement with a dovish end comment. And that's usually a not so bad idea to combine the technicals where we see we have not broken significant levels with the fundamentals that rather look better for the euro at this point. Again, this is a very dynamic factor, may change very often. So basically, then you can decide, okay, strategically, I'm at a low price. Now, from my understanding, the price has a good potential to go back up here. And then you have to decide what kind of trade style are you. Are you going to stay in the trade for weeks, days, whatever? Or are you looking to say, okay, the euro is kind of capped down here, so I want to go on a lower time frames. And whenever the euro bounces off this low level here, I want to buy and grab a few pips. You know, you can try to play the support rejection game, for example. You know, it came here, came back up to that, it came back here. So you buy it, wow, it went back up and so on. So try to bounce off these important support levels. So that would be one on the short time frame. You can also look at it on a daily basis and you can try to scale into your trade. You can say, okay, I'm going to buy now here if the trade continues to go down since I bought it with a smaller position. I'm willing to add a trade, so we go here and put my total stop loss for both positions down here, for example. So this is how you combine the trading levels and with the fundamental story, because the fundamentals for the euro remain rather positive. And now you can identify your style. Like, what do I want to do? Do I want to go on a short term? Do I want to play the rejection game? Do I want to wait for the first confirmation that the trend has turned to when we break through to the on 18 again to the upside? You know, there's a number of plays that you can play, and that has to do with how you want to look at the markets and what types of cycles, time frames, short term, longer term, trend following, counter trends, you know. And these are decisions you will have to make for yourself to see what fits you. Do I want to just trade the euro because I'm informed about euro politics and ECB monetary policy? And am I more of a commodity-driven trader? Do I want to trade oil, for example, or gold? So you can see the S&P 500 has dipped down yesterday a lot, which has helped yen also to gain, because yen is a safe haven to want to play the risk on risk off game. So there's really many things to look at. Do I want to trade crypto? Obviously, it's another possibility to trade. Do I want to trade Bitcoin or other altcoins? So you have to get invested into the markets that you're interested in. I'm not talking about money. I'm talking about interest, about looking at how does the market usually behave. Is there some pattern to it? What is the technical and fundamental situation as it is right now? Do I enjoy listening about Brexit? If I hate Brexit, if I get annoyed just by the sound of the word, then I shouldn't trade any pound related to trades, you know. And find your niche, find your story, find your technical style, and then and how do you find it? By trying out. You know, go in small positions, test yourself out, make hypotheses about it. Then if the price does this, I want to do that. Define what you're going to do before you do it. This is my entry. This is my exit. Have a journal put in. How many times did you win? How many times did you lose? Did you fiddle around with your original trade and that's why it didn't work out? You know? So document yourself, audit yourself, and become the best trader you can be. You know, it's like everything in life, repetition, repetition, and work. Really, you can outwork anyone else in trading by putting in the dedication for it and finding your own niche, your own market, your own style to do it. And we're really trying to give you a first step into that world, because these days you can take things into matters into your own hands. Markets are accessible for anyone with low deposit sizes. So, I mean, it was never as good as it is today. I really enjoy being able to do that. And I hope that my passion a little bit grows out of this video and reaches you as well. And in the next course, we will transition to the next level, which is the advanced video courses. And there we will talk about things like leverage, margin, different time frames, chart types, major indicators that usually traders use, popular trading strategies. Who will touch on a few of them. How to manage risk properly. So these things we will talk about in the next video series. That's it for today's lesson. And until we meet again, have a great day.